Good morning, good morning. How are you guys? Nice to have you with me once again. January 16, 2025. Welcome, welcome back. So today I wanted to take a look at, we'll take a quick look at the S&P 500, and then I wanted to look at the Magnificent Seven stocks. I know a lot of you trade it, and I know I get questions about them um, throughout the day and throughout the weeks. And last time I did a focus on Magnificent Seven was, I believe, last year. So this will be a fresh look at the Magnificent Seven stocks and see what they're doing, and we'll compare it with what the S&P 500 is doing at this time. So again, welcome, welcome. Nice to have you, and let's get into it. Let's start by shrinking me down. Zoop. There we go. And we'll close this off. And we will fade out the music. How about that? Perfect. Okay. Now, so let's start by looking at the S&P 500. So, if you remember, here's a situation that we had with the S&P 500. Okay. Let me get my little pen here. And there we go. Now, if you'll remember, we had an area here. I told you this is going to be the demand area that's going to keep price up in a range. And this was the supply area that was going to keep price down and within a range. So what ended up happening? Look what happened here. That demand area was broken through, okay? So the range to the downside broke through. But it created a supply area, lots of selling here, institutional selling. And what just took place? Institutional selling got taken out. So this range broke to the downside, produced supply, supply has been removed, and it's opening up for a move to the upside. So why did that happen? Why did it break out of the range and then all of a sudden reverse course and head back upwards? Well, let's take a look at the higher time frame to be able to determine that. Let's look at the higher time frame. Here we go. This is the weekly chart. And what do you see here? We have an ascending trend to the upside right here. Zoop. Okay. And we have a demand zone right here. Now, that demand zone was already used before. If you take a look, you'll see that it was used back here, caused price to go up. But remember, I had mentioned that if price comes back to this area, it could hold. And why would it hold? Well, because it's an area where there was previous demand. Even though it was tested, it was previous demand. And it's in correlation with the ascending trend line. Okay? It's right there, right at the crisscross. The support of the ascending trend line and a previous area of buying. So what did we see as price was coming back down towards that area? We see a big rally up in price. So as far as I can tell, okay, by looking at the S&P 500, it's being supported by institutional buying, okay? Now, for us to know with great certainty that this institutional buying is going to sustain itself, what I'd like to see, and as you can see, I'll point something out to you here. We have a descending trend line here. And as you can see, it is holding. Okay. Yes, supply has been removed, but that descending trend line is holding. And that's not a good sign for a continued move to the upside at this stage. What is a good sign is that buying that we're seeing at that ascending trend line on the weekly chart and that demand zone. That is good buying. But if we really want to see strength in here, what we're looking for is something like that. Okay. We would really like to see this area here be removed. If that happens and they come in with new buying, amazing sign. Okay, amazing sign that this market's going to go up. But for the time, what we have is a situation where medium-term buying is coming in and it's supporting this market. Medium term is good. That means many days, many weeks, we could see price pushing to the upside. All right, So with that being said now, let's take a look at our Magnificent Seven stocks, shall we? We'll go to Apple first. And first thing I will point out is on the monthly chart, we have an institutional buying zone located right here. This is for long-term buying. Price rallied up, reverse contacted the institutional buying zone, and as you can see, we're seeing pressure to the upside. So far, this is in line with what we're seeing with the market. Long-term buying coming in, causing price to rally. Price retraces down to that long-term area of buying, and now we're getting the buying taking place and pushing price to the upside. Okay, if we look at the weekly time frame, you can see there's demand there as well. This is a good area. We might start to see a continued pressure to the upside build from here. I would not be surprised to see price continue like this. Okay, all that would be required once it got up here is to remove this area of supply, head over to the next supply, and then away she goes. Okay, but I am watching this one. I am watching this one closely because I think we might just see continued buying take off from this area. All right, so this looks good. Looks very good. Let's look at Amazon. Amazon just recently took out an area of demand that came into the market here on the daily time frame. I had used this demand to enter into more positions, I think. Hold on. Let me just take a look here. Did I enter there? No, no, I had a stop loss below here. Okay, so this was institutional buying that came in. And as you can see, the institutional buying came into play here, came into play here. Third time, it broke through. We exited our position. Now we're seeing bullishness. Sure, we could get short-term bullishness. That's not a problem. But in terms of if this is an area that I want to start accumulating a long position, no. Because once they break through an area of selling, then once they break through an area of buying, I'm not interested in buying that area anymore. Okay, because I have to ask myself, why did they remove that buying area? So the market is being supported, the S&P. We could see that. So what's going to happen here? I mean, if we look at the weekly time frame, we can see that price has not retraced down to an area of buying yet. Okay, here's an institutional area of buying. On the daily chart, it removed it. We go up one time frame, weekly chart, it has not contacted that yet. So as far as Amazon goes, I wouldn't be buying Amazon until it came in with new buying, new sustainable buying, and we'd be able to track the demand zones coming into the market. Retracements into those demand zones, if we had good quality demand zones, I'd get back into the market. But as far as I'm concerned right now, it's not a good time. Google, take a look at Google. Look, everything is to the upside. Okay, let me point out something to you. Look, demand in play here, demand in play here, and demand just came into play here. All right, so as you can see, it's holding this area really well. Okay, this is the latest area of demand that came into the market in the 180s. Prices contacted once, fell short, bought, and buying again. So this looks to me that it could be very well supported, and price could definitely continue to the upside from this area. I'd be risking, I'd be basing risk off of that daily area of demand holding, and so far it's looking good. All this here that you're seeing looks to me like accumulation because it's taking place above a demand zone. And so it looks like accumulation is taking place there. Now, unless the market, the S&P, starts to break through demand zones and starts heading lower, there'd be no reason why this one would be going lower. All right, let's take a quick look at Meta. What do we got with Meta? Let me take a sip of my coffee. So Meta came into some supply here. Okay, look what took place here. We have demand down here. It did not come down into the demand zone to start building momentum to the upside. Instead, it went into a supply zone right up here and dropped. So for me, I wouldn't be interested in going long meta unless this area got taken out. New demand came into the market, and then away we go, right? So as long as supply is in play, I'm not interested in getting involved in this one. Let's take a look at Microsoft. Oh yeah, it's been sitting sideways, not doing much for a while. Yeah, not good looking chart. So I would be focusing on the um, daily time frame here. We got supply here. We got a supply here. Okay. And as you can see, this is the highest area of supply right here that we have. So if you're a conservative trader like I am, what you'd want to do is you'd want to wait for this zone to be removed and this zone to be removed. And then it's clear skies, at least from what I'm seeing here. Okay. We want those two obstacles to be taken out because that's institutional selling. These areas are institutional selling. So, if price gets into those institutional selling areas, they could easily just start selling again and dropping price. So, how do you know if they're going to drop price or rally price? Well, you would know it by watching to see if the areas get removed. If this top one gets removed, then retracements to demand zones would be ideal. But as far as what I'm seeing right now, I wouldn't be touching Microsoft. NVIDIA looks like weekly charts in play. This is what we've determined. Latest area of significant buying took place here. So I wouldn't be really interested in buying this one unless there was a drop. And then from there, I'd be looking for long signals for move higher. Okay. So like I've always said, it's very important to always know what chart is in play. And how do you do that? Well, there's methods of doing that, which we teach at the school. Daily chart is not in play right now. It's the weekly chart. So this is the one that you want to be focusing on. All right. Last but not least, let's get to Tesla. Tesla's looking pretty good. Looks like it's reacting. Big demand, daily. All right, so we just got a daily area of supply removed, as you can see here. Oops. A daily area of supply removed here. I wouldn't be focused too much on this time frame. I wouldn't. New demand could come in on this time frame, but it wouldn't be good enough for me to go long. Okay. I just want to remind you that on the monthly time frame, we just got two major momentum candles to the upside. Okay. So ideally, what I would want is a retracement and then buying here. If price ever got down to 262, buy. That's what I'm doing. That's what I'm hearing in my head. Buy, 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 buy. Okay. Because remember, we had many, many months of price doing nothing. Remember, Elon Musk was offloading shares here. And so we had a lot of sideways action. And then what took place? We had institutional buying coming right here. Okay, this is big money here. Big, big money coming in and buying here at this area. So, I mean, where would you feel comfortable buying? Up at 428, or where the institutions were significantly buying between 212 and 260s? I'd prefer that. So when I look at the other time frame charts, they don't look very good to me. Ideally, if the S&P, Nasdaq, and all that started dropping and taking out demand zones, that wouldn't be a bad thing. Actually, that would be very good. I would love that, because then we could see moves down into these areas of demand where the big institutions have buy orders. Very, very sure of that. Okay, and then you could ride the wave from the 260s up to 500s. Okay, double your money. So anyways, I'm not making any recommendations of what you should do. I'm telling you what the charts are telling me and what I would be interested in doing. Okay, folks, that is it. if you want to join us, we're going to be having some new classes coming out, and one of them is going to be teaching you how to interpret the CFTC data. I get a lot of people asking me about that. They want to know, how do you interpret the CFTC data? There is no easy way to learn it, because there isn't just a video I can do in an hour that you watch and it tells you exactly how to do it. It's a process of studying CFTC data to get you to have the skills to be able to do it yourself. So we're going to be doing something very unique here at the school. I'm going to be releasing dates for when the class starts soon. So make sure you join our mailing list. Very, very important. Join the mailing list. Subscribe to that. We're going to be sending you exclusive videos, video analysis, and dates for the new classes. Okay. Also, a scholarship opportunity. Forgot to mention that. A free scholarship opportunity. Do you want to learn how to interpret the CFTC data? You're not going to want to miss this one. So when we announce the free scholarship opportunity, make sure to take part in that. All right. That's it for me, folks. You take care of yourself. Have a good one.